Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
SP Tulsian of sptulsian.com is also with us now. Mr. Tulsian, good morning. What's the stock recommendation for today?
Today's stock recommendation is Rane Madras, and this is an auto ancillary company with having two divisions. First is steering and suspension linkage products, and second is die casting. And if you see, the company is having 72% market share of suspension and steering linkage products, and catering practically to all the automobiles makers in the country. And they have about 6 plants, of which 4 are for the steering and linkage products and 2 are for die casting. And in fact, if I first take the financial performance of the company for FY17 on a standalone basis for whole of FY17, because the company has only come out with Q1 numbers. Q2 numbers are awaited on 22nd November. So if I take on Q1 numbers standalone FY17 standalone numbers, the top line was 1000 crore, PAT 19 crores and EPS 17.40. But that has got sharply reduced to maybe with EPS of 4.10 on consolidated basis, largely because of one reason, that company has acquired one die casting unit in January 2016, and that has impacted for whole of FY17, having a top line of closer to about 210. It was EBITDA negative, but that unit also having turned around just last quarter, though the company don't declare their quarterly numbers on a consolidated numbers on a quarterly basis. So this is a very classic case of turnaround, and I hope that H2 FY18 will see the better performance coming in on the consolidated basis. So taking that into consideration, the standalone EPS of 17 rupees, company paid a dividend of 60%, that is 6 rupees per share. And if I take us Q1 standalone numbers, they have been in line or maybe slightly better than what we have seen for the corresponding quarter of the previous year. Again, if you see, because of that acquisition, the company has seen its debt rising to maybe about 300 crores. So promoters have issued the shares and warrants to themselves in mid-September at 547 rupees per share, and have infused about 80 crores in the company. So taking all this into consideration, and the equity pattern shareholding of the promoters having raised to about 62%, and Rane Group having strong presence in the auto and auto ancillary space, I think this stock qualifies a good buy and can move to a level of 635 in next 6 months or so.
All right, Mr. Tulsian, always a pleasure having you with us. Thank you very much for that long-term bet.